Well, with that, let's shift focus back to equities and how the equity market is looking at all the volatility in the run-up to the big electoral result. Investec Capital Services has recently written a note on what the voter turnout data in the recent Lok Sabha election phases perhaps reveals. They are arguing that voter turnout is influenced by perceived strength of parties at the state level, local issues, voter fatigue, national alignment of parties and weather-related issues. To discuss more about this and the takeaways from the report, we have with us Mukul Kochhar, Head of Equities at Investec Capital. Mukul, great to have you on the show. Thank you for joining in. And very interesting report. And, I can just go back and look at the last 3-4 weeks with the VIX hitting record levels, a lot of volatility, profit-taking. And at the center of it all was exactly this, that voter turnout seems to be low. Though I think we are still averaging in the 60s, which is not too far away from the mean. But what is your sense on the link between voter turnout and the profit-taking that we've seen on the street?
Yeah, so Surabhi, I'll take you to a period before the elections. And, what was remarkable is that, something that influences politics and hence economics in the country for the next 5-10 years was completely in the backseat. It was a given, that everything's going to be okay. So elections were not a discussion point, for equity investors at all going into the elections. And then suddenly this curveball was thrown where the first phase had a drop in voter turnout and all kinds of discussions started coming to the fore. So the equity volatility was, derived from the fact that this was totally unexpected. A curveball was totally unexpected. All the opinion polls going into the elections were one way, with the lowest being India Today Mood of the Nation polls at 304 for BJP. So, anything that challenged, even if remote possibility or small possibility challenged the status quo, became a discussion point, and hence the increase in VIX. So that's essentially what happened. I mean, it was because we were very complacent, because we weren't looking at the elections as an event altogether, that suddenly it was thrust upon us. As we look into the voter turnout data and do that analysis, I think the way we stand today, given the level of information we have, we go back to the opinion poll. And as we've discussed in the turnout data, it doesn't really reveal anything advantage for one party over the other. So the last well-known data point for us is still the opinion polls that came in right before the election. So unless something really changed in the last month for the electors, I think the opinion polls right before the elections are the data point that we should focus on.
So if the BJP gets about 300, 303, which is similar to what they got last time around, what will be the market reaction? Will they be okay with it? Will we continue to move on? Or will there be some disappointment? And one more question, Mukul, what is smart money doing ahead of this election? They've made a lot of money. So have they just booked some profits? They're holding on to cash position and just waiting to see the outcome?
Yeah, so I'll answer both questions. So first on the number expectation. So if you did the math prior to the election, the number that was going out for the ruling alliance, it was a stretch, right? It was difficult, and it's also been explained by some people as an aspirational number to sort of give a target for people to go after, right? Realistically speaking, that number looked a stretch. I think in the mind of investors, the 303 becomes one operative number, because anything over that you can make a safe argument that the ruling dispensation or the current dispensation is gaining increased acceptability, and hence that can continue, right? So 303 means more penetration into the country by the ruling dispensation. More than 303, ruling dispensation gets stronger. Less than that, you can make the argument, hey, we peaked on that, so what happens after 5 years? So obviously a weaker statement. And then the next operative number is 272, which is the absolute majority that allows you to have a stable 5 years of government, right? So 272 and 303 are the numbers. Between 272 and 303, there can be some argument that BJP has peaked. Above 303, of course, you can start making the argument, hey, there's still room to run. So that answers that question. Which are the numbers to focus on? I think 272 and 303 are the two numbers to focus on. The next argument is, what does the market do after that? If we do get over 303, I think the market is quite well priced. I don't think we do much. There is going to be some relief rally. And what has the volatility come from? On the desk, what we see, the smart money, as you said, the institutional investors, let's just call them, it's pretty much business as usual. I haven't seen a change in stance or flows from institutional investors on our desk, through this volatility. I think where the nervousness or where the more trading is happening is, I think my sense is more on the retail side, as well as ETF flows globally, which are also retail driven. So I think institutional money has remained smug through this entire volatility, is my opinion, and the retail is where the volatility is taking place. And post elections, we expect a little bit of a rally, but not that much. Yeah, sorry.
No, we're just hearing all your points and pretty interesting ones, Mukul, but unfortunately a little short in time. We have a very big interview also coming up with Infosys, but we would really want to catch up again, let June 4 get over, and then want to get your view on the market call once this big event is out of the way. What should investors be focusing on? So look forward to that conversation. But thank you for this. Thank you for the pre-election views and how to read a lot of the electoral cues that we are getting. Good to have you on the show. All right, we'll take a break on that note, come back with more on the markets in just a bit.